Good afternoon. Today is Monday, December the 5th. The time right now in Singapore is just 1 minute to 3 p.m. in the afternoon. And just a recap of what happened over on Friday before the market closes for the week. We can see that the Dow Jones Industrial Average continued to edge higher, but on Friday itself, there was no new high created. The high traded at 34,589.77 was actually registered on Thursday. So we can see, looking at the daily time frame, we can see that the market has actually have a very robust October to November period, and it's getting very close to the September high. And the September high has actually been taken out, and it's very close to my projected target at 34,842.9. Okay, and this is also just a touch below the April high at 35,492.2. And going into this week, I think the market will continue to correct as what we have seen on Friday, and this correction may last maybe towards the end of the year, towards the end of the week. And then what we have is the week before Christmas, which is next week. We possibly will see the buyers coming back because the asset managers could be rebalancing their book because they need to be paid their bonus, and they definitely will like to push the market higher so they get higher valuation, and their bonuses will be based on their the year-end pricing. So I think there will be this annual activity in which there will be a lot of window dressing, basically just to push up asset prices so that they all can valuate higher. So going into the 2023, I think there's a risk that the market may extend into 2023, at least for the first week. And then somewhere in the second week of January of 2023, the market could actually peak, and what we see this year could be repeated in 2023. What we saw this year was the Nasdaq and the Russell 2000 actually peaked in November, one month before the year end of 2021. And then the Dow Jones continued to extend into record levels in the first 2 days of trading on January the 4th and 5th. January the 3rd and 4th, in which the market extended the record high, and then it kept the market, and then it has been falling. For the first 6 months of 2022, we can see market has been falling. So this could be a pattern that we may be seeing also in the beginning of 2023. So I do expect some kind of a market top somewhere in the middle of January, and then this may extend the market lower all the way to maybe April to May of next year. So we will have to look out for the possible repetition of what we see this year. Okay, although we will have to watch the market as it unfolds. Okay, so what we are seeing also in the S&P 500, there was also no new high traded last Friday. The market actually picks out at 4,100, and which is very close below the September high of 41.19 in the cash index, which is also a touch away from my target range of 4,118 to 4,232. Okay, very close to my target price. Once the price move into this area of pricing, there is the risk that the market may actually lose momentum and start to come off from there. So do watch out for this possibility here. Then in the meantime, what you can do for those short-term traders, we can actually draw a very simple support line, because sometimes the simplest thing will actually work, because the market has actually been going up very gradually. Okay, so a support line, this will actually give us some kind of bearing. If the market in the near term breaks this support line, then it does give us an early warning that market maybe has already peaked and is getting ready to resume its fall that we saw prior to October of this year. In the Nasdaq, we also see the similar pattern. We can see the market has rebounded very aggressively from 10,440 to 12,115, and this was traded on Thursday, and the market did not make any new high. And then we can again draw this line here, which is a very simple way to project some kind of early warning system. Okay, if you draw this line, you can see that if the market do break this very near-term support line, it does give us an idea that maybe the Nasdaq 100 has also peak at 12,115 and getting ready to trade to the downside. So do watch out. Something like this will actually work very well. Over in Asia, we can see this morning the Hang Seng actually managed to extend its rally, and now the market is very close to 20,000 now. The high traded this afternoon was at 19,496 and a half, which is actually very interesting, because this market again unfolds as a three wave. Okay, and we will have to see whether it can sustain beyond what we see so far. Okay, so if you draw this line, and we're all seeing the very quite similar activity. Okay, the market do come off and break something like a support line on the 60 minutes that will give us the early warning that we need to tell us that the market may have already peaked. So in the Shanghai Composite, we are still getting extended rally. The market is getting very close to my target price of 3,226 to 3,281 in the Shanghai Composite Index. This morning, we have a high of 3,213.38, very, very close, and there's a possibility the market may continue to edge into this bracket of prices. Over in the Nikkei, we can see the prices falls back down again. This was actually happened last Friday. The market actually came off after hitting a high of 28,423, and this was a gap. Okay, the market actually reacts to the downside and broke this near-term support line. It broke actually earlier on last Tuesday, and then it rebound back, and then before it come back down. So this is unfolded as a three-wave decline, but because it has taken out I would consider significant support line, so we will have to see whether it can climb back in again or not. If not, I think the market is more likely to trade to the downside than upside. Okay, and this pullback from 28,502 could unfold into a more complex corrective pattern. Okay, do we want to look out for this? And over in the currencies, we can see dollar yen continue to trade a bit lower. The high traded was very close to 136 on Friday, and then after that it pulls back. This morning was still trading just above 134, and only now this afternoon, now that London has come in, the market is trying to see whether it can retake back the 136 level. Now, based on the technical outlook, if this is a corrective bounce, then there is a possibility this market may actually go higher to 136.25 to 136.80. So we have to see what the market does when it eventually bounces back to 136.25 to 136.80 levels, and we will see whether it can sustain. Okay, if it's not sustainable, maybe it will start to slide back down again. Now in the daily time frame, this is very interesting because this rally in the dollar, if you look back from all the way back, the market actually started to rally in 2021, and which accumulated in a high just under 152. Okay, and this is not just this is only like into the last week of October. So for the whole of December, the whole of November and the first week of December, you can see that the market has pulled back in a five-way structure. So when you see a five-way structure, that means to say that this price no longer suitable to chase, because there is a possibility the market will rebound back to 142.25 before it unfolds another leg of the possibly the same magnitude from 152 to 133. So we want to see this market here, how does it react at 142? So there is a risk that the market can actually rally before it come back down again. And if the market do take out 130.39, okay, this is crucial, because if the market can take out 130.39, it will means the bull market that we saw at from 2021 will be considered over, and the market is more likely to trade to the downside from here onwards. So that means that there's a possibility the market has already peaked at 152. Okay, here. So do watch out for this possibility here. And of course, the market has been bearish the dollar, because last week we hear the Fed Chairman Powell has been telling us that going forward, he is prepared to slow down the rate of change for the rate hike. We know that for the last 4 rounds, they have high interest rate by 75 basis points. So last week, the Federal Reserve Chairman actually hinted that he is prepared to slow down the rate of ascent maybe to 50 basis points. The next coming up FOMC will be on December 14. So this will be the last FOMC and the last rate hike for 2022. So we want to see whether that will actually happen. Okay, so the market has already priced in a 50 basis rate hike. But remember, this is a slowdown of the rate hike. Rates are still continue to go up. Okay, what the Federal Reserve Chairman did say was that he expects rates to continue to be traded at a higher level and for much longer. So while the market is thinking about pivoting, meaning to say the Federal Reserve cutting rates, that is not a possibility in the near term. So the market has been looking only at the possibility of a pivot. Okay, so the pivot is highly unlikely to happen unless there are two conditions here, two scenarios which I think will cause the Federal Reserve to actually cut interest rates. Okay, one is that the US economy spiral into a very, very, very sharp recession. That's one. The other one is that there is a major bank failure, and this is not beyond possibility. We are already seeing a lot of liquidity issues in the bond market, and if the bond market causes counterparty risk in the among the major banks, because they are all counterparty to each other, right? So we already saw a sampling of what a liquidity crisis can happen recently when we saw the UK government under the Prime Minister Liz Truss in the mini budget caused the market to seize up, and that could be something that we must be prepared, because the market does have all the ingredients ready for a major bank failure. And if one major bank fails, okay, it will has contingent possibility for the other banks, because they are all interrelated. Okay, so unless we see either one of these two conditions or these two scenario appears, then a pivot by the Federal Reserve is almost not something that we want that we need to consider for time being. Okay, but as we go into the next few months, we can see that there's a lot of factors that can cause the market or may cause the Federal Reserve to pivot. So do watch out for the news and keep your eyes glued on the development, especially in Europe. Over in sterling versus the dollar, we also see that the sterling has been accelerating its downside from somewhere in the middle of 2021. So you can see that this market here has already more or less hit a bottom at 103.50 before it rebound back to the most recent high at 123.44, this which is this afternoon. So we want to see how far this thing can go, because at the end of the day, the market has already hit my target price level. Okay, so it actually went beyond my level by a little bit. My target was original 120.60 to 123.70. So now the market is at 123.44, still within the bracket of possibilities. So we want to see potential weakness after this run up. Okay, again, we can do something very simple. We can draw simple support line. Okay, and to see if the market can actually does break this near-term support line to give us some kind of early warning system. Okay, if the market on the 60 minutes take out the near-term support line, that means the market has already peaked at 123.44 and is now more likely to trade to the downside more than to relative to the upside. Over in euro dollar, we are seeing similar pattern being formed. We can see the market has unfolded. Now we go back to the daily time frame. If you see the daily time frame, we can see the market has actually traced out a 5-wave rally. So a 5-wave rally means at the current price, around 105, it is no longer suitable to continue to chase on the buy side. In fact, the risk increase disproportionately as we continue to see prices above 105. The risk is that the market may actually peak any moment now and starts to come back down again. So what will happen is that if the market started to slide, we want to go down to a lower time frame to draw something similar to what we draw for the sterling by drawing a near-term support line like this. Okay, and use this as our early warning tripwire. So if the market do take out this very near-term support line, it does give us early warning system. Okay, it's not perfect, but it is a tool, okay, that you can actually use. Okay, of course, once the market break the support line, the idea is that the market would have already peaked in the dollar, in the euro dollar at 105.85, and then the market is slightly, any rebound is supposed to be is an opportunity for us to get in on the short side. So wait for this move to develop. Over in the crude oil, we can see crude oil actually rallied all the way to $83.34 on on Thursday, and then do a pullback. The lowest it pulled back to was $79.65, and it does look like maybe in the near term we can see another pullback to complete this near-term 3-wave pullback. So if we have a 3-wave pullback, possibility we may be looking at near $77. Okay, I've actually placed an order to buy anything below $78. So if the crude oil actually pulls back to $78 or between $77 to $78, that is actually a good area to consider picking up new long position. I currently flat. I have no position whatsoever in any of this product right now. I'm just waiting for a chance to get back in again. Okay. Over in gold, we can see gold this morning went up to a high of 1,810. Okay, so this is the highest it has been over the last 6 months or so. You can see the market actually bottoms out at $1,615 here. $1,716, and then the market has been going up since. Over the daily time frame, we can see that this rebound is also tracing out a potential 5-wave rally. So what it means that now the market is getting vulnerable for at least a short-term pullback. So the market has actually gone into my bracket my target bracket of between 1,802 to 1,846. Now when the market is at 1,810, so we can say that the market has already hit my target, and now we have to wait for the market to tell us what it wants to do going forward. But obviously, I'm not going to buy at above $1,800. I will be more than happy to pick up, buy again if the market can retrace back to $1,720 thereabout. Okay, that will be a much more comfortable level to go back long again. Now, the focus was as far as precious metal is concerned, is not so much on the gold market. I personally think that the focus should be on the silver market, because I've been saying this for quite some time now. This year we see that there's a huge amount of central banks buying of gold to the tune of more than 400 tons. They have never bought collectively so much gold since 1967. So something is cooking in the precious metal market. Either they believe the fiat currency system is about to end, or something else major is going to happen to the point whereby maybe currencies going forward will be based on more commodity-based currencies, and gold is a commodity. So maybe there is this pivot that's going on in the precious metal market. They're telling us maybe the day of the king dollar is over. We have seen ever since the breakout of war between Ukraine and Russia that everybody is trying to get rid of the dollar because the US has actually proven that they can actually weaponize the US dollars. And of course, they also use all the financial institutions to actually target them against their foes. So those countries that have a lot of US dollar holding now are trying to divert, okay, their holdings away from US dollars. So maybe at some point, something else is going to happen, and maybe we want to go back to hold on to something tangible, okay, like precious metals. So currently what happens is that the market is very, very tight, and we have seen when the silver market actually option expires on November 27, there was a lot of volume traded and there were a lot of delivery. Now what happened in the precious metal market is that most people who want to take delivery will go to London to buy, but London is very, very tight right now in the sense that there is simply not enough supply, okay, to satisfy this very aggressive buying by central banks. So now the focus has been shifted to the COMEX market, which is the futures market in New York, whereby those long are hedged into the futures market in New York. So the COMEX precious metal market usually do not end up in delivery, but now we are seeing something happening because most of the contract that expires, especially those that recently expires on November 27, end up in physical delivery. Something is very odd here. Something just is not right. There's a fundamental change here. So that's causing a bit of a short squeeze because the futures market in COMEX does not end up in delivery most of the time. So they have very little stock in the warehouse. So now people are insisting on taking physical delivery. So what can they do if those people have to deliver? They will have to go to the open market and buy and bid out the prices. And we are seeing that in the futures market right now. Silver have gone up this morning to $23.52 in the cash market. So definitely the play right now is in the silver market. Going forward into 2023, yes, precious metal market may actually go higher, but I think silver will definitely outperform gold by quite a bit of a degree. So if you have to choose between investing in gold or silver, then I think my money is with silver. So do go out there and watch out for this move, the short squeeze that's happening right now in the silver market. Over in the crypto market, we can see market has been very docile. There was a bit of a rally going on, but I think the rally was actually a corrective rebound. You can see this is the 60-minute time frame. This is Bitcoin. The low traded was 15,479, and then you can see the market trades up to a high this morning at 17,425. I think this is about the peak already, okay, because this market trades out a very neat three-wave rebound. And like I say, we draw this simple support line here, and if the market do break this support line on the 60 minutes, that will be our first alarm bell to say that the market may have already peaked at 17,425 this morning. So going forward, if the market does break this line, any rebound is a selling opportunity. Over in the Ethereum, we do not have a new high compared to the last Thursday high of $1,308. Okay, the high this morning was $1,304, and the market seems to be losing some kind of momentum. Similarly, we draw this simple support line. If it breaks, then of course get ready to for the market to actually be peaked at 1,308. In Ripple, we do not have any kind of major move. It seems the market is contracting. You can see that I have joined the tops and the bottom. It does look like the market is contracting into a into a triangle. As a price action move towards the apex of this triangle, at some point it's going to break out. Okay, whether it's going to break up to the upside or to the downside, that is the major question we have to ask ourselves. So far, if the other coins actually may have peaked already this morning, then the possibility of a breakout to the downside is a lot higher than a breakout to the upside. So trade accordingly. Okay. Binance coin also did not have any new high traded relative to last week. In fact, the market high was at $297 this morning, and thus looks like it is having a 3-wave rebound. And again, the market looks a little bit soft going forward. Dogecoins again do not have any new high traded for the relative to last week. So again, we draw this simple support line here, and it's getting very, very near to the support line. If it breaks this support line, that will be the first idea that maybe Dogecoin has already peaked at 0.10 cent, 0.11 cents, and it's getting ready to trade to the downside. All right, guys, this is all I have for you for now. Tomorrow I will update you again. In the meantime, have a good day. Bye-bye.